In my book, Confluence Not Coincidence, I talk about and discuss how to set the operational landscape and its importance with those confluences. In this video, I'm going to teach you how to do that using the Visa stock as an example. So it's very important to understand the operational landscape of any instrument that you're trading, and also understand the behavior and how it behaves on those confluences. And what I'm going to do here is cover setting up that operational landscape, understanding the behavior for the Visa stock. Okay, so this is a big chart and I'm going to explain a few things on there. So let me just reduce my ugly mug and take it up to down there. So a couple of things. The big pink trend channel is from the weekly time frame for Visa. So we're on the daily, but this is the weekly. It goes back a long way. Very strong bullish channel. We've got a red bearish channel here as well for it was a good year where we were in this downward trend. And then we've got a green trend channel, which is on this daily time frame, which is run parallel to the weekly time frame. The support and resistance zones are generated automatically. This is the NinjaTrader version platform, and we're running the Guardian zones. So those in blue there are what we call the weekly support and resistance zones, those linear support and resistance zones, and all those in grey down below and above are on the daily time frame. So they're our support and resistance zones, that operational landscape set automatically by the Extract Guardian zones, and the link down below is for that as well. So let's go through and understand the behavior of Visa. We're going to go back all the way back until what I call the pandemic pullback, so the COVID-19 pullback. Now, one of the things also we need to discuss is the Russia-Ukraine invasion as well, because that had an effect, that confluence of that geopolitical effect, that data, everything was affected by these two big occasions, if you like, throughout the recent history of the Visa stock. So one thing I want to do first is just go down to the bottom of the chart here. I'm going to look at what we call, it's an Elliott wave oscillator, but what I want to really concentrate on is this oscillator divergence that we've got here. So we can see the peak of the pandemic pullback here, where my cursor is, to where the peak is coming away from there, and including the peak from the lows of the Russia-Ukraine conflict there. Now, conversely, when we see the top bound of that bullish oscillator, that's parallel. So we have an oscillator divergence. So that really confirms the overall bullish sentiment of this stock, which is a good thing. That's understanding that behavior. Let's look closely now. So the pandemic pullback, one of the big pivots on this pullback was actually on this longer term weekly channel. Can't ignore that respected that channel. We then came all the way down on that pandemic pullback and had the recovery. The recovery pushed back through this big weekly support and resistance zone and then found support in there. And if I zoom in on this, you can see here where we had multiple tests. So we're testing the center line of this big long-term weekly channel, and we're coming back to test the support zone provided by this weekly linear support zone, almost an ascending triangle, if you like. So really strong support forming there, and which shows us that this particular weekly or confluence of weekly zones, there's quite a lot overlapping there, is a very, very strong support zone, and we should always look to see that being respected in the future. So then we're going to go further back up to another point on this big weekly channel here where we had some profit taking. So this was post earnings, this was Visa at its highs, and this was natural profit taking at that time. I just want to also bring into account this new weekly zone that's coming through the chart at this point here. So this will come in later, but I just want to point this out right now that we've had 1, 2, 3 touches. So 2 touches is just a bit of a, it's not really a trend. But if we get 3 or more, this is when we start to really, this price is respected. So just keep that in mind for a little later. We're now going to go to this short-term bearish channel. We'll say short-term, we're talking sort of May 2021 until the lows in October 22. So it's quite a long time. And there were some catalysts in there. So the first catalyst was profit taking, earnings, natural profit taking at those highs, and that happened. One of the things I want to really draw your attention to here is from that point, the price did come down. It tested this weekly channel, this weekly zone again. It came back up, but found resistance at the center line of this weekly channel, which also then started to form a new weekly resistance zone. We then pulled down initially to find support at the lower bound of that weekly channel, okay? But then it ran out of juice and came back down. And where did it test? It tested at this previous really strong support zone on the weekly. So there's confluences at play here, and this is what's going to start to help us draw in this trend line here to help us understand this channel. We then get another test, okay, so we push all the way back up. We don't quite reach the center line of this weekly channel, but we do test this new weekly support and resistance zone. So now we can connect this pivot with this pivot. Why? Because we've got confluence also in a linear and a non-linear resistance. We're starting to see a trend line form on the bottom here. We're starting to see a channel which it's respecting. It comes back down to test again at this support zone, but also respecting this lower bound of this bearish channel. Really, really strong. And then we're going up to test again. And then we come back down. We actually break through this big weekly support here. Find a double bottom. Again, this trend line, this bottom of this channel, really, really strong. We then have good earnings. We start to recover from this Russia-Ukraine. News sometimes is prevalent during a big geopolitical event, but over time, other things take precedent over news cycles, and we started to recover from this Russia-Ukraine conflict. Even though it's not over, as I'm speaking right now, it's not in the news as much. We found some really good support, some confluence of support here, both linear and non-linear, and it started to recover. Now, then we want to draw attention back to this big, strong weekly zone here, because we do test this from underneath at this point here. We come down, and then eventually we're testing it again at here as support. Really strong. Attention should always be drawn to these really strong support and resistance zones, especially where there's confluence. Now we're starting to form a bullish channel on the daily time frame. We're really starting to push. We've tested the top bound of this, where the cursor is here, now on this bullish channel. The bottom bound is here. We're getting a lot of tests. We're starting to get a trend upwards again, and we can define that with that non-linear support and resistance channel here. The next thing I really want to draw attention to, obviously, is this is a really strong move here. This will come into play if things go wrong and this stock comes back down again. But right now, this is where we've been. Since probably July 2022, we've been in this upward move. We've came out of the rut. We've recovered, and now we're making new highs. But the main thing is, we had this daily channel in parallel to the weekly channel, really strong, but now we've broken back into that weekly channel. okay, and we've made new highs. So that's all well and good. We've set the operational landscape, we understand the behavior, and to be honest, institutional traders look like they do respect the confluences of repeated tests, overlaps of these bigger support and resistance zones, both linear and the channels. So there's lots of respect there from institutional traders where we get these confluences, and I've highlighted those on this chart. So the next thing we want to do is, where's it going to go now? Where are those trading opportunities? So let's have a look at one particular scenario. So now I want to zoom in on that same chart on a 195 minute time frame, and you're going, what, why 195? Let me explain. So the US stock market is open from 09:30 a.m. to 16:30 p.m. That's 390 minutes. Half of that is 195 minutes. So now we get 2 candles per trading day. We start to smooth out that chart a little to understand flow and behavior. The 240 doesn't quite work. Okay, it's never worked for me. A trading day has an open, a high, a low, and a close. If we take that into 2, we just smooth that action out a little bit. So let's have a look. Okay, so this is where we are on the 195. So let's just reorientate ourselves a little bit. So this pink trend line here is the bottom bound of that big weekly channel which re-entered. The hash gold line is the center line of that weekly channel, and remember the daily channel is this green one, and this is the center line for that daily channel here. I've also got the bias depth heat map on here as well, just to give us an indication of where we are as far as that bias is concerned on higher time frames. And as we can see, we're pretty much all green now. One thing I do want to draw the attention to is we're going to be using Elliott wave here, in the Elliott wave indicator suite, and where to isolate that is very, very important. So we've got a very, very strong double bottom here, okay, and this is a very fine sort of daily time frame support zone at this point here. Again, it's all automatic with those expert guardian zones. So you see the vertical line here. After this double bottom, this basically is the start of the current trend on the 195, okay? And this is the trend that's taken us back into that weekly channel. So this is the trend we need to be measuring. So it's very simple. That's where I've started that Elliott wave count with our software. One thing to note is we tried to push up through, that's our first impulse move, through the center line of that daily channel. We then came back on the wave 2 and found support around that center line. So that was the pullback against that. Then we've had that big long wave 3, which has taken us out the daily channel and back into that weekly channel. One thing we need to discuss is that overall sort of that oscillator divergence that we've got on there. This must remain true if we're still in this sort of longer term bullish move. What I'm going to talk about in a minute is that we're going to get a wave 4 pullback at some stage, and then we're going to trade that 5th wave move. On that wave 4 pullback, there are rules that we do follow with the Elliott wave oscillator, and that's for another lesson. But the main thing for me is on that pullback is we don't break this longer term divergence that we've got on that Elliott wave oscillator. So setting the operational landscape, let's go back. I want to go back and talk a little bit more. So what we have at the moment is we've printed a wave 3 because that's a new high. Okay, I'm not going to go into Elliott wave theory as such because the software does it all for you. But in reality, we can see 3 pullback zones, green, amber, red. This will automatically reprint as behavior changes. So if we get new wave 3 highs, and this just keeps going, and most likely the preferred scenario for me, considering we've just had earnings on Visa, so we've got a long time until April till we get the next one, is this bullish run continues and tests the center line of the weekly channel. These are specific fib overlaps and pullbacks, so this will adjust as we get new wave 3 highs. Once we get a pullback, a certain percentage away from that wave 3 high, this is then set and we can measure the behavior of that wave 4. When we find support in one of these zones, and most likely there will be a confluence, so I'd like this pullback zone to come back and test this lower bound of the weekly channel as well. What the future holds, I don't know, but behavior does repeat itself. Confluences do happen a lot. So we'd look for find that support, measure that behavior with the tools that we've got, and look to trade that 5th wave move. So for now, for those swing traders on Visa, we've set the operational landscape. We've got the weekly channel on there. We've got the daily and the weekly support and resistance zones. We've got the recent weekly sort of trend channel that's been there for a good year. We've broken back into that weekly channel. So we now understand the behavior. If we're just going to be swing trading Visa, we just need to sit on our hands and wait for that wave 4 pullback. Okay, Visa is probably tradable 3-4 times a year, and we just have to sit and wait and be patient. So this is now all set up. The chart's there, the operational landscape is set. We just need to put that on our watch list and keep an eye on it every day. So let's go back now. So remember, setting the operational landscape is all about those support and resistance zones. The extract Guardian zones is only available for NinjaTrader, but they are automatic. They get taken away and they get added as things are tested or broken, and they're very, very accurate. Understanding behavior of a trend is something that Elliott Wave is really good for. So the thing is with technology, and I explain this in my book, is that nowadays traders don't have to in reality go into too depth on Elliott Wave theory. Algorithms and software does it for you. It takes all of that learning out. You just need to follow the rules when it prints certain things. Very, very simple. So again, setting the operational landscape is extremely important for any instrument, and then understanding that trend behavior if you're going to be swing trading in particular, Elliott Wave and using software to measure that trend behavior is very, very crucial to understand how it's performing. Hopefully that helps. Check out the links below for the Guardian zones and the Elliott Wave. There are really, really sort of crucial tools to help you when you're swing trading stocks.